You are listening to ChartingWealth.com's daily review for Monday, the 6th of June, 2016. What do we have going on in the markets? Well, we'll start with IYY, then go to the S&P 500, then the NASDAQ 100. IYY, of course, is the total market. It's the iShares Dow Jones U.S. Total Market Index Fund, and we see it has been moving up since the 24th of May 2016. We have 1, 2, 3, 4, 5 2-day up candles representing, of course, 10 days worth of movement. We had a crossover back on the 1st of June on that 2-day candle. That is a crossover on the MACD moving over the red signal line. Also saw the derivative oscillator about the same time move over going up. So we're in a confirmed up move on our 2-day chart. If you've already listened to or about to listen to our weekly review and forecast, also being released about the same time as this review, you will find that the weekly chart is also in a confirmed up move. What do we see happening, though, over the last 2-day candle that wrapped up on Friday the 3rd? Well, we see a topping off. Now, we had a down movement over the course of Friday of 0.32%. When we look at our 2-day candle, it is not a down candle, it's an up candle. It represents 2, not 1 day of movement, 2 days of movement. We do see a top wick, which means that the market had moved up higher the prior day and then was trimmed off. And we see the market basically at the same spot it was on the prior 2-day candle on the 1st of June. That's why we don't see our MACD separating largely from the red signal line. We do see the derivative oscillators continue to gain energy. Now, if we look at the 4-hour chart, that is the half-day chart, we will see reflected a sideways slide starting in the afternoon on the 2nd of June, and we see what we would call a spinning top on the morning of Friday the 3rd, and then a doji in the afternoon, a spinning top represented by a small red open box with large wicks on either end, and then we have almost a straight line in the afternoon representing basically the market again being in a state of flux. Indecision is the way that the week was ended, again down 0.32%. We don't yet have a crossover going down. Now, what might we be looking for here? If we do get that crossover going down on Monday, we may see a bounce off and then a move back up. That would be our trigger to get into the up move that actually started way back sometime around the 23rd, still in that confirmed up move. But again, we haven't had a buy-in point yet. We want a pullback, which may be about to occur. Then if the market turns back around and starts going up and crosses over, going up again on the short chart, that would be our trigger to then get in. Haven't seen that happen yet, so we shall see what we shall see. All right, now let's go back. We're going to go back to our 2-day chart, and we're going to move over and take a look at the S&P 500. What do we see going on there on our 2-day chart? Well, we had a crossover back again, as similar to the total market on the 1st of June. Actually saw the derivative oscillators flip over earlier than we did on the total market. It flipped over back on the 2-day candle on the 27th of May, and we see a red spinning top. Well, it's pretty much a red down box, open red down box on the 3rd of June for that 2-day candle. Again, it has a much higher wick on it, so there was more up pressure, but again, pulled down by the bears. Also has a bottom wick on it. We see again that we didn't have movement above what happened on the 1st of June. If we go to our 2-day chart, from our 2-day chart to our 4-hour or half-day chart, what do we see? Again, that sideways slide we see in the morning on Friday, a lot more downward pressure on the S&P 500, and then a green open box candle, again, almost a spinning top also in the afternoon. So lots of indecision. Derivative oscillator lost its energy in the afternoon significantly, and it looks like we're getting close to a crossover going down on the S&P 500. Let's continue to see what we see. Don't forget, if you've listened to our weekly review and forecast, we do have Janet Yellen speaking on Monday. So that'll be interesting to hear what the Fed chairman has to say and how that might affect the markets. Again, is a sad state of affairs, that the way things are, that what the central banks say is more important than what we might have production-wise, economic growth-wise, or anything else. But that's what you get with central banks. So we deal with the world the way it is, the markets the way they are, not the way we hope they are. That's why we pay attention to what the charts show us. Now let's go back to the 2-day chart, and we're going to take a quick look at our last of our indexes, which is the Qs. What is the Qs? It's the NASDAQ 100. We see a breach in our 2-day trend line. Derivative oscillator continued to gain energy, still in a confirmed up move on that 2-day chart, but warning signal, 2-day trend line is breached. There's no way to draw a 2-day trend line that would not be breached by the 2-day candle that ended on the 3rd of June. Now, if we drop back and take a look at what's going on our 4-hour chart, we can see that a confirmed crossover did occur. Derivative oscillator also crossed over. Maybe we'll see, after this pullback occurs, a move, a crossover, again going back up. That might give us the ability to jump into an up move in the Qs, that is the NASDAQ 100 index. Let's just continue to watch and see what goes on. We'll see what this next week holds for us. If we can see continued up movement in the markets, hopefully we'll find a good buy-in point when the 4-hour chart crosses over going up again, and we can find an entry point. We shall just wait and see. All right. Lastly, we're going to go back to our 2-day chart. We're going to take a look at gold. Gold was up 2.78%. That's 2.78% on Friday. Huge up move in gold. We see that being reflected in a crossover, a huge crossover from, well, a break in the 2-day trend line. We still don't have a crossover yet on our 2-day chart as far as the MACD goes. But boy, we had a nice solid down trend line that was breached pretty substantially as far as what we see going on Friday. We see that there is a huge up wick on our 2-day candle, bit of a down wick there too, and an open box green candle. Derivative oscillators lost energy, and the MACD and the signal line do appear to be moving toward each other. No crossover yet. Still got a lot of energy to lose, down momentum on that derivative oscillator, but a lot of up movement on Friday as far as gold goes. We should see more of that reflected in our 4-hour chart, and of course we do. We see the market opening, actually breaking through the 2-day trend line, and then strong up movement in the morning, followed by up movement in the afternoon. So we have a break in gold's down movement. Now again, let's see what happens. Maybe this is just a bit of an anomaly and it'll cross back over going down and we can find an entry point into an inverse gold purchase. We'll just have to wait and see. We don't see that happening yet. No confirmation yet. So we've got a lot of things to watch for over the course of this next week. We so appreciate you being with us every day. If you haven't already signed up for and aren't already receiving our daily podcast, you can do that at chartingwealth.com. When you do, you'll get the link to our latest version of the 15-minute How to Read a Stock Chart video that'll get you started in learning to read a stock chart. In order to figure out what's going on in the market, you've got to be able to know what's really happening with price movements, and reading a stock chart helps you be able to do that. So critically important to anyone who wants to be successful in the stock market. Learn to do it. The first step, sign up for our newsletter, get our How to Read a Stock Chart video. You'll also get our charting layout, the layout that we use from freestockcharts.com. Thank you so much for being with us. We love to hear from you. If you appreciate what we do, ask you to do one thing for us. Go to iTunes, subscribe to either one or both of our podcasts, our video weekly podcast or our daily audio podcast. It also includes an audio of the weekly podcast. Give us a 5-star rating. Say something nice about us. We so appreciate all that you do for us, and let us continue to do this for you. Thanks so much from chartingwealth.com.